Hello and welcome back. So in this video we will take a look at re-entering a market, finding alternative entry points, and we will also take a look at different market structures. And by the end of this video you will have a good understanding of when to look for re-entry opportunities, where they are, and when there are no re-entry opportunities based on different chart contexts. So here we have this very nice transition from uptrend to downtrend. But you can see here at the top it was a little bit messy, lots of back and forth. And so how do we look for a re-entry opportunity or an entry opportunity in the first place? You can see that probably here there is some type of support area. Also let us just mark a trend line and we can see 1, 2, 3, then here a little bit of a consolidation around it before we then break lower. And I will mark the entry points here with such a rectangle tool. Let me get that a little bit darker so it stands out. And so the first entry opportunity that we usually discuss is when we have a good break below this trend line, which happened then here on this candle. We broke very nicely below the trend line. You can zoom in. The candle was relatively large. There was some type of rejection wick at the bottom, but not too worrying, because at the same time we can see that here in this area there must have been some horizontal support. Let's draw that using the right place. So you can see here support, support, support all the way through. So we broke below the trend line. This was a little bit more of a risky entry because you're still ahead of this support area. Then the next entry opportunity on such a market would have been here. You can see we broke below the trend line we broke below the support area in a very strong way. So the second entry, if you didn't take that or want to add to your trade, also a good one. And then here we have the third criteria, which is our 20 SMA retest. You don't get that often, but when you do, then this is a very interesting pattern. So you can see price went back into this support area, which is now resistance, and also in the 20 period moving average. And then once price finds new downside momentum, once the next candle closes red and confirms that the moving average is holding, then you have your third entry point. And so you can see there are multiple ways how you could have entered such a trade with looking at the different structures, trend lines, support and resistance, also at the moving average, and that is a good example for how you can approach your entries in a different way. And this is a little bit more of an advanced topic, but I think it's very important that you know about it. And then once you start following reversals, you will be aware of the different possibilities how to get into such a trade. US dollar Norwegian kroner, this was a trade that we were in, and you can see already price did not respect the moving average too much. Here we broke below it, but you can see at that point we just had basically one large up wave, so that was not a good market. And then we moved into this market top. Not sure if we can draw a trend line, more or less not ideal, but we can just look at it and then see there is some type of what we call the flip zone. So you can see resistance, support, support, and then here as well on the way down. And at the same time I want to draw your attention to this rounding off pattern. So there is a lot of good confluence or context to this pair. You can see we will go from higher highs very nicely to making lower highs. Very great example. And so where could you have entered such a market? Again, the first a little bit more risky entry, because the trend line is not as clear, would have been here after this break of the trend line here. But again, you are above this support area, as I said in the previous example. So once we broke below the below the support area, this is then the candle that closed below it. Although you can see it's a little bit late, but you have much more additional confluence. And you can see when we zoom in, we came even back in the next candle into the moving average here. We retested it once again, we found resistance, and then we turned lower. So if you missed that, then you can enter on any of the next candles. You see you didn't get a huge drop initially, and after this resistance you can see price then turned lower again. So again, there are a few very interesting entry points, and you can see right now that's a common pattern as well. We are putting in new swing lows as price turns lower. You can see we are making lower low, lower low, lower low, and on each break of such a lower low you could also look for re-entry opportunities, but we will get into this in a later example. But you can see already that if price now breaks here below the below this support area in one of the next candles in a strong way, then you can even add to your position once if you are already in a trade. So that's a way to scale into a trade as well, or to add to your existing position. Here another very nice example. You can see clearly price is rounding off, but we have this market top which makes it a little bit harder to trade. At this point we broke below the moving average. If you'd taken a short entry, it probably would have not been ideal because we are just grinding higher here, not a good swing structure. And then again you can see it already with your eye probably. We do have some type of trend line here, support, 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 lots of confluence, lots of touches, and then here we have this fake breakout to the high, to the top, and then afterwards we start making lower highs, lower high, lower high. And so again, where would have been the entry opportunity? And you can see it here, very strong break of the support area and of the trend line, so the initial entry here. Then here is a great retest pin bar pattern. You can see it, price shot back all the way into the trend line, it retested the trend line, it retested the 20 period moving average. Now we know that price would not have immediately sold off, but there's no way of knowing that before. So if you enter after such a candle, it is a valid entry signal. You can see our stop loss, if you've already watched the stop loss video, would have gone here above the previous swing high, so you would have been safe. We get another retest here of this support area, which is now resistance, and you can see you could have even gotten another entry here once price is pulling away on either of those candles. Every candle is a valid entry candle here if price finds here resistance and moves lower. At the same time, here again, very nice example, we are putting now in lower lows, and you can see price is breaking the lower low here, is breaking the previous swing low. So again, here would have been another entry opportunity once price is making another lower low here and closing below this swing low. So again, you can see many different ways how you can enter such a market. There's no right or wrong. Just pay attention to how those reversals play out, grab screenshots, take records, take notes, and over time you will get a good understanding of those patterns, and you will see that they repeat themselves over and over again. And so you can build your repertoire and build your knowledge about those reversals very nicely. Then here is a good example how you cannot always find re-entry opportunities. Obviously, when we look here, we have this transition, and we even have this very nice resistance area here, which is then price breaking. You can see probably also some type of small trap here with a very small squeeze. And then here the initial entry was at the break of this resistance area, and then price just started to rally. So in such a case, I not recommend that you chase price. You don't try to force a re-entry opportunity, because price is not going to, because price didn't give you any retests, no nice swings, no nice swing patterns where you could have scaled in on a break of a swing low or a swing high. So in that case, you just have to be okay. You cannot always find a re-entry opportunity, and that is totally fine. There will be plenty of other trades which have a good market structure. And here is another interesting example. You can see we're coming from this two-wave downtrend. We are finding support here in this reaction area. We are then turning higher, and you can see here then we have this very clear swing structure, swing high, oops, and then so on. You can see lots of swing highs actually, swing high, swing high. So even though here it was a little bit trickier to enter, here was the initial break. You had to sit through a little bit of a drawdown. Here is actually another swing high. So the initial entry would have been here after this long candle. If you missed that, or for whatever reason you will scaled off of your trade here because price came or went against you, it did not follow through, that is totally fine. And here there are a few re-entry opportunities. Probably this one, very interesting. You can see price is breaking and closing above this previous swing high. Another one here, we have put in this swing high, and now you can see this becomes much more of a trend following entry and trend following trade. But as we said in the beginning, every trend starts at one point with a reversal, so it is natural that even reversal trades then mature into trend trades. And especially if you want to build your knowledge and build your repertoire as a trader, expand your playbook a little bit, it is very important that you know what to look for in such a market phase when the trend matures, and you can then maximize your profit opportunities probably by looking for re-entry opportunities. And in such a case, it is very obvious. You have those swing highs. You can always see prices breaking it, putting in a new high and breaking it, putting in a new high. And so you can use those swing highs to scale into such a position on the way it goes up. And that's a few examples of different market structures. Use trend lines, SMA retests, swing lows and swing highs, and you can see how you can very nicely find and identify good re-entry opportunities and second or third entries during such trending markets and during such reversal trades. Thank you for